Dynamic landscape. I'm sure that you're aware funding opportunities come and go quite frequently, and hopefully out of today, if nothing else, you'll get the information you need to know where to look or who to ask when funding becomes appropriate to your innovation journey. I'm not going to focus too much on the DSI aspects of funding. Everyone is here because they have some connection to DSI, either through our information portals or directly through previous funding activities. So I'll just point out that from a DSI perspective, everything that you need to know about our program is available on our website. Any changes to our programs or opening or announcements, we broadcast pretty regularly through our social media portals. Plus, we're really a generally easy bunch to talk to. So drop me an email, give me a call, and we'll work on any of the DSI small funding programs and grant activities. However, today's probably about the more impactful stuff. So without having me wrap it on much further, I will pass to Kate Whitehead, who's the CEO Director at Avant Group, and she is the person with all the wisdom that will be passed on. So Kate, thank you very much, and over to you, ma'am.
Thank you, Craig. Good morning, everybody. Thank you for joining us today, and thank you for the lovely intro. So today I'm going to start sharing my screen, and we've got about an hour for today's session. And basically what we're going to be doing is going through looking at, as Craig mentioned, the amount of grants that might be available out there for you. So I'm just going to change my presenting mode. So 1 second. Here we go. Sharing again. Apologies. Okay, and that should, hopefully you can see me now. Yep. So basically just covering off on different grants and funding that might be available for organisations. As we go through, I'm hoping that we get a fair amount of dialogue, so please feel free to pop some questions in the chat box, and I'll address them as we tick along. I've also popped in a few different times throughout today's seminar with questions as well, so don't be shy. Try and stump me, ask me as many tricky questions as you can, and I'll do my best to answer. So effectively, Avant Group is a government grants and funding pure play. So our organisation looks at the identification of funding opportunities that are available for businesses, then managing the submission process, the ongoing compliance and management of these sorts of programs. Our team is fairly niche in the fact that we have quite a very strong technical background across the organisation, with aerospace, mechanical, science, chemical engineering backgrounds, teamed with tax advisory and compliance services as well. So we actually run both the application process and then also the audit function across government grants. As you would well know, many of these are audited. This gives you a bit of an idea across our group. So today I'm sort of talking about the grants and funding space, but we also have a very large research science division, Avant Capital, which is in the wealth management space, and most recently we've also put on board a commercial arm which deals heavily in sort of PPSR and SME contract management matters, etc. So the scale of grants. Obviously, I'm not going to talk about 1,500 grants today, but this gives you an idea of just how much funding is available out there for organisations. So at any point in time, there will be 1,500, 1,450, 1,500 plus grants that are available. They cover in a range of areas in both competitive entitlement and loan schemes. And I'm going to talk to you about the different types of funding that's available across those different areas today. And then on top of that, there's about another 3,300 grants that are open in the trusts and foundations space. So I'm not even going to go into that today. And to be honest, it's not really an area that our firm deals heavily with. We deal very much in the sort of commercial business or, organisational association type government grants. A lot of trusts and foundations are run by private entities, which we typically don't deal with. So the first thing, I guess, is to understand is the landscape of funding. So understand the difference between entitlement versus competitive grants, what that means for your organisation. So entitlement programs are very much that. So they are grants or funding initiatives that you are entitled to if your organisation is appropriately structured and you undertake activities of an appropriate nature. Because they are administered by the government, that means they're also heavily audited. So basically today I'm going to cover off on 2 different entitlement programs. There are actually quite a few more out there, but looking at the mix of who's attending today, these are the 2 most relevant. I know a lot of you will know about these programs already. However, I guess a refresher doesn't hurt. And also both of these programs have had recent legislative changes. So it's not a bad idea for me just to cover off on them. So I'm going to spend 10 minutes on both of these today for you. So the first one is the Research and Development Tax Incentive. So this is a program that's really designed by the government to get Australian organisations to invest into, cutting edge and leading edge research and development projects. And by doing so, they incentivise you by either a super tax deduction in the form of a non-refundable rebate or a super tax deduction in the form of a refundable rebate, depending on the company turnover. One of the key things is that you must be a company. You cannot be a trust or a sole trader. You can be a corporate limited partnership, but you can't be 2 sole trader partnerships. So entity structure is actually really important in this space. A lot of the time we meet organisations and they've been doing eligible R&D, but they've been doing it under the wrong corporate vehicle. So we've got to make sure that having that conversation up front, making sure that the company structure is correct in order to claim is quite important. One of the key tenets around R&D or research and development tax incentive is you must follow what's called a scientific methodology. So to simplify this program, because we do get a lot of questions about it, R&D is not product development, okay? So it's not new product development. It actually has to be a scientific project where there's an unknown outcome. It's novel, it's new to the world technology. And if it's not new to the world technology, you've got to be able to demonstrate that the other entities that are doing it, it's a trade secret, you can't have access to it, and thereby you've got to have your own R&D. So there's quite a few complex limbs that are required to meet the legislation if you're undertaking a project. The key areas behind this is also you must have what they call core experimental activities. So core activities are based on established science, the outcome cannot be known in advance, and it's also for the purpose of generating new knowledge. And then obviously attached to those cores, you can have multiple support activities. So support activities could form the basis of background research or the development of a test prototype for which you then need to do core research on, for example. So that's sort of the key elements of what potentially would define an R&D project. One of the key things that I put it in big red writing up the top is documentation. Research and Development Tax Incentive is a brilliant program, but obviously, as with any sort of tax-based incentive, it all relies on the amount of documentation that an organisation can demonstrate in the instance of an audit to substantiate the value of their claim. So if you are undertaking any R&D, it's good to have a very good structure up front where you're maintaining a repository of information, you're keeping records of tests and experimentation, design iterations for your documentation, or or anything that can substantiate the activity that's actually been undertaken. In addition to contemporaneous timesheets are also recommended to be looking at as well. So activities that can't be core activities. So this sort of goes to what I was saying before around what is or isn't R&D. Market research, so that's a commercial activity, is generally not a core activity. You can only claim market research where it was, say, for example, directly linked to a core research activity that was eligible. So, for example, if you needed to develop a new drug and this drug was for a specific, ethnic background, for example, and you needed to get a sample size of those ethnicities to do the testing on it, then potentially you could claim that. But in the most, market research, market testing is not eligible. Prospecting for minerals, management studies, social sciences, humanities, patenting and licensing, we get asked this quite a lot as well. So in the patent and license space, generally they're not eligible because that's actually once you've done your R&D, then you're actually going through that commercialisation stage. So there are other programs that will help cover that. Compliance with statutory requirements, because again, it's not novel, it's not new knowledge. You're just merely iterating to meet a particular standard, wouldn't be eligible. Software development for internal administration. So if you're developing your own CRM, that's not R&D. And then the other one's activity undertaken overseas that isn't covered by what's called an advanced overseas finding. So they're all eligible. They're all activities that are not eligible under R&D. So the key thing a lot of people say is, well, what's the value of it? What's the bang for the buck here? So effectively, it depends on your company turnover. Now, with organisations that have an aggregated turnover under $20 million, it's claimed at a base rate of 18.5% above the company tax rate. So a lot of you will have seen previous documentation that says it's a straight 43.5%. The reason that they've now linked or hedged it to the underlying tax rate is because over the next couple of years, the corporate tax rate and the SBE tax rate is actually decreasing. So by linking it, if you're going to decrease the underlying tax rate, then it meant that effectively every year the R&D value was going to increase. So now what they've done is they've sort of linked it to the underlying tax rate, so it'll drop down with it. So whilst the percentage will decrease, the underlying tax cost base will also decrease. So basically for this year, it's unchanged, it's still 43.5% because the underlying tax rate is 25%. There's no limit on the amount that you can get as a refund under the R&D tax incentive. Whereas companies with an aggregated turnover above $20 million, it's non-refundable. So that means that if you're in a tax payable position, the research and development activities that you've done, the costs associated with that will offset against the tax liability. So you still do get a cash benefit attached to this program, whereas if you're under 20 mil, it's literally at the end of the year, you're getting a check written by the ATO, whereas if you're over 20 mil, it's offsetting against tax debt. And then if you don't have a tax liability that year, it carries forward to future years. So there still is a cash benefit. In the larger organisations, they've now broken it into tiers, and they're doing it as what's called an intensity level. So they're really trying to incentivise organisations not just to do a little bit of R&D on the side. They really want to get larger corporates and larger organisations to properly invest into research and development activities. And they're doing that by saying that if you have an intensity threshold of above 2% of your R&D expenditure, we'll now increase the value of the claim to 16.5%. So if you're a large organisation, there's potentially up to 46.5% under current tax rates that you can get, which is a significant increase in benefit for organisations that are doing relevant activities. And the annual cap for large organisations increasing from 100 to 150 million. So we are seeing some really great stimulus measures coming from the government in relation to this. So what can you claim? This is the next question that people ask. So basically anything that can be attributed to your research and development activities can be claimed as eligible expenditure. So salaries for staff and any on costs, so your work cover liability, your superannuation, for example, contractors and consultants, an apportionment of the company overheads. So we can actually claim a percentage of your rent, your power, your infrastructure costs, any direct expenses. So if you're getting, tooling manufactured for test purposes or prototype development can be claimed. Contribution to CRCs, these are called cooperative research centres, which I'll touch on a little bit later on, but basically they are organisations that act as sort of like a conduit between research and industry. You can claim costs attached to those. Depreciation of tangible assets to the extent that they're utilised in R&D activities. So, if you've got a production line and you have to close that production line to then do some research and development, test batches, for example, the time of the depreciation utilised for that equipment can actually be claimed under R&D. Intangible assets, so the utilisation of software, if you've got Mastercam, KCAM packages, those sorts of things, fluid dynamics, you name it, you can claim that. And then when I said overseas R&D, I put a little maybe there. That's dependent on your advanced finding, as we mentioned before. So R&D is about, building capability in Australia, not building it offshore. So if you're going to be doing any R&D overseas, you need to prove and you need to get approval contemporaneously within the year that you can't get it done here and it has to be done overseas. So that's a key element of the R&D tax incentive. Things that are ineligible, so building expenditure, interest, acquiring core technology. So what that means is if you had to buy, say, for example, access to a node or a sub-assembly, for example, or the rights to a core technology utilised for your R&D, that wouldn't be eligible. And this is a really key one here: payments to associates not paid in the year. We see a lot of organisations where they'll have multiple entities, and if you have a cost in one company and costs in the other, and one of them is claiming and the other isn't, you can't just do a book entry transfer and claim R&D tax incentive. And it's an integrity measure, because effectively on one side of the bucket, you've got a company that's going to be getting a 43.5% refund. And then on the other side, you've got a company that's paying a 25% tax rate. So one of the easiest arbitrage opportunities in the world would be to go, oh, okay, well, I'll just raise an invoice for $1 million. I'll charge $1 million to this company. I'll get 435,000 back, and I'll just pay 250,000 tax. It's like, no. So anything that's an intergroup transaction must be paid, like physically transacted each financial year, and it can't have any intergroup markups. It's got to be at actual cost. So if you've got Bob over here earning $10 an hour for his work on the project, you can reimburse Bob at $10 an hour. You can't mark that up. So that's a really key critical element of R&D tax incentive. Here are some scenarios and what it means, because I know it's a bit confusing when you go, well, what's refund, non-refund, values and all that sort of stuff. So effectively, scenario A, we've got an organisation that's under $20 million turnover. They've spent $1 million on R&D tax incentive. They're in a tax loss position. So at the end of the year, they're not making profit. They might even be pre-revenue. Okay. So with that spend, they're going to get a $435,000 cash refund. On the other side of the fence, if they're in a tax payable position, they're going to get a $160,000 tax offset. Now, if it's anywhere between the two, you'll get the delta of the two. Scenario B has a company between 20 and 50 mil turnover. So that's at the 38.5%. And in that example, they're not actually getting a refund. They're getting a tax offset of 110,000 under both scenario. Scenario C is a larger organisation that has less than a 2% intensity measure. And a lot of people saying, what's the intensity basically mean? It's literally just your R&D expenditure as a percentage of total company expenditure. That determines what that percentage is. I've simplified that, but that sort of gives you a bit of a feeling for how we measure it. And in that example, it's an $85,000 tax offset. Whereas if they're higher than the 2% intensity, they're going to get a $165,000 tax offset. So you can see that irrespective of whatever scenario you're in, there's always a benefit there. So it is a super tax deduction. Obviously, depending on where you are in your product development, your research development, that determines what sort of benefit metric you're going to get as a result of the incentive. So the next question is, how do you actually claim? So basically, at the end of the company financial year, you've got 10 months to lodge a submission with AusIndustry. There's a new process this year, which they've implemented, which is now an online portal. This is part of the increased compliance measures that the government's placing on research and development tax incentive. So in the past, ATO and AusIndustry used to sort of operate in silos. Now there's sort of a combined effort around the administration and auditing function of this program. So you'll see that the auditing will go up, and we're estimating it's going to be anywhere as near as 1 in 3 companies will actually have an audit this year under their R&D tax incentives. So that's something to be aware of. Get your paperwork in order. Basically, 10 months after the financial year. So if you're June 30 close, you've literally got until April 30th the following year. There are some rules for extensions, but there's timings as to when you've got to apply for it, et cetera. But generally, try and be organised to get it within that 10-month period. Once you've lodged it, you then get what's called an innovation number from AusIndustry. That's a unique registration code of your project. Each year, you've got to apply for this special code. That code's then appended to a schedule, which is handed to your tax accountant, and your tax accountant lodges that schedule in line with your normal tax return, and then you'll get your benefit processed in line with your normal tax lodgement times. So effectively, if you are in a cash refund position, most organisations are hotly getting their documents together now, because obviously the new financial year's ticked over. We can now look at FY21 claims. It's about getting it in early so you get your money back quickly. Whereas if you're in a tax payable position, it's generally in line with the latter stages, so that obviously you're reducing that cash flow requirement to pay it out earlier. So the timing, you've got that flexibility as part of the process. Are there any questions before we move on to the next program, which is the EMDG? Okay, I'm hoping this the chat functionality is working okay, because I can't see any popping up. So if I'm missing any, I apologise. I'll come back to you later. Miko, if you need me to jump in, just pop your hand up and I'll start answering some questions as well. Okay, so the next program, again, this is an entitlement-based program. It's called the Export Market Development Grant. This is a long-standing grant that's been around, I think, since the 70s. So it's, a very sort of well-worn and well-utilised program. But again, there have been some critical changes to the program this year, and I'm finding a lot of people aren't actually across the changes. So even if you are, au fait with the EMDG, it's probably worth just paying attention, because you might get a few surprises here that you weren't expecting. So FY21, window's still open, the normal process applies, okay? So if you've been spending money on export marketing promotional expenditure, the current claiming process remains unchanged for the current claim window. Now, if you're a year one applicant under this, it means you can actually bundle 2 financial years together. So we'd be looking at FY20 and FY22 on a cash basis of expenditure spent, I should say, not just incurred. You've actually got to pay it. Whereas if you've previously claimed EMDG, then you can only go back 1 year. The years don't need to flow after each other, so you can have a break and then reapply at a later stage. So it's quite a good program for that. So you sort of look at your expenditure and decide whether or not you want to claim. So under the current process, organisations were entitled up to $1.2 million over a maximum of 8 grants and a maximum grant each cycle of $150,000. So if you've spent any expenditure on international agent fees, I was going to say travel, but I don't think anyone's been doing any of that. But, if there was any travel, actually you might get a little bit in FY20 claim, potentially, really, really early on. So if you've had any travel in that period, if you've got any marketing promotional costs, Google AdWords, you name it, we can claim it. And effectively you get half back. So that's sort of the way that this particular program works. Now, a key element of this is it actually excludes New Zealand and North Korea. So I feel a bit sorry for the New Zealanders being bundled in that lot, but they're the rules. So as I said, at the moment, window's currently open for FY21 expenditure. Here's a breakdown of what we can actually what we can claim. So reps, if you've got any reps overseas, you can't claim commissions, but you can claim any retainers if you've been paying any retainers. Marketing consultant, whether they're located in Australia or offshore, as long as they've been doing anything that pertains to export promotional activities for you, and you've been paying them for those promotional exports, then you can claim that. Or even some strategy work, if they're doing like an export marketing plan for you, you can claim that. Travel, as I mentioned before. Samples, so if you're sending any samples overseas, you can claim the cost of the samples, not your retail value, but at cost. Trade fairs, and even trade fairs located in Australia can be claimed. We have to apportion them based on, a factor of international versus local focus of the trade show, but we can still claim local trade shows. Promotional literature, overseas buyers with some limits, they're people coming into Australia. And then this is the key one as well for a lot of people on the call, registration of eligible intellectual property. So if you've got any patents or trademark expenditure that are for overseas filing and lodgement, excluding New Zealand and North Korea, then you can claim up to 50% of those back. The cap on that's $50,000. That means you can get $25,000 cash back under that program. So that's the old rules. So that's the process that we're claiming at the moment for what's been spent. Now we go into the new rules, so the new EMDG. It's now flipping from being like an entitlement program into an entitlement grant program. So what that means is you'll actually put an application in upfront for approval. So as part of this process, we have to go in and we say, look, this is the company, this is what they're exporting or they're attempting to export. These are the markets that they're looking to move into. They'd like funding for these particular marketing activities, etc. And then prepare an application for that. Then they'll come back to you with a grant contract awarded. Now, one of the key things that I've put in here, hopefully everyone can still see me because I've just lost my video shot, but one of the key things that we put in here is there's going to be a funding ratio dependent on the balance of payments. So what that means is the EMDG is administered with a fixed budget every year. And it's been a slight frustration, I guess you could say, for clients and applicants of this program where they've gone out and they've spent their money with the intention of claiming up to $150,000 back, only to find out that the grant in that particular cycle's run out of money. And as a result of running out of money, they're then looking at sort of apportioning or slimming down how much money everyone's going to get back. So under the new program, they're saying we've still got a fixed budget. what we're going to do is we're going to open the window. You can apply. This year it's between August and November, so they're extending the window, but in future years it's only going to be for that sort of 1 to 2 month period. We then know how much people are planning on spending. We'll then give you a grant offer based on that as a percentage. So you might be applying for 50%, but because of everyone's applying for 50% of X dollars, we're now only going to give you 30 or 20, whatever it might be. And then from there you can go and spend, and you'll know that you've got that assurance that you're going to get that percentage back. So it's good, I guess, in the sense that you're getting a little bit of comfort up front around your acceptance and eligibility of the spend and how much you're going to get back. And also it's going to be paid in milestones. And I'm putting again, maybe. We're not really getting much clarity around how many milestones you're going to be allowed to claim. So I'm thinking we're going to try for 6 monthly milestones, but chances are it's probably going to be annual, which doesn't really change what it is at the moment. So the key thing is, if you miss that upfront window for application, you can't spend as you normally would and then claim next year. Those rules are gone. You've missed the window that year. You've then got to wait for the following year's window to get your application in. So just be really aware of that. So that's a key change of it. The other thing that's changed is the value. So in the past, you'd be able to get up to $1.2 million. Now it's only $770,000. And I know a lot of people are saying, oh, that's ridiculous. It's decreasing the value and da, 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 da. To be honest, not many people actually ever claimed the full $1.2 million. So, in the most part, it's pretty fair. The companies that were claiming it were probably those that are very large and didn't really need that much monetary support. So I'm hoping that this reduction in the value will actually sort of spread the money more widely and more fairly. The other key thing, and this is a bit disappointed about this one, is that now if your turnover is above 20 million, you can't claim. So in the past, it used to be 50 million. So that's quite a significant change. And it's a bit tough, I think, for an organisation that's been well established and doing really good things in Australia and selling well, and then going to export markets. It's almost punishing them for doing well in the Australian market and then looking at overseas, because obviously they won't be eligible. So the key thing there is, if your turnover is anywhere between 20 and $50 million, irrespective of how much you've spent, claim now, because it's a one-trick pony for you. It's over after this. So you may as well just put in a claim and get whatever you can this year, because next year you won't be eligible. The other key thing with eligibility is it's a lot more flexible than the R&D tax incentive that I mentioned before. So you can be a sole trader or a trust or a not-for-profit, or, so you can be any sort of structure. It doesn't matter. As long as you've got an ABN and you're an Australian-based operator, then you're eligible. The products and services remain unchanged under the new EMDG. So they talk to Australian content. So basically, you can be importing. So if I'm a fashion designer, for example, I can get all my clothing manufactured offshore as long as I can demonstrate that there's a significant amount of Australian content in Australia. So in that example, if I'm designing it, doing all the designs myself in Australia, but then merely getting it manufactured, that's actually an eligible EMDG product. Whereas if I was just merely buying it off the shelf from overseas and acting as a retailer, then it wouldn't be. You've got to be what's called the export principal, and this is a really key element of the legislation. So what that basically means is you've got to be the one actually exporting it. So on your own export license, or you're the one actually capturing the revenue from the overseas buyer. And the reason that that's important is a lot of agents out there take legal title to goods, and we see it a lot in the wine space, where they're aggregators. They'll buy in all the wine, stick it in their warehouse, and they'll export it. Whilst the Australian wine company might have been the one that's actually established the sale and incurred all the export promotional costs, in that example, they wouldn't be eligible to claim unless they're the ones actually exporting it on their own export license. So that's really quite important to be aware of. The normal exclusions are the same: visa migration, property development, and sale of Australian assets, for example. So the way that 770,000 works now is we apply under 3 tiers. If you're an industry body, this is irrelevant for you, you're uncapped, but for everybody else, you fall into these 3 tiers. The first one is a grant of up to 40,000 for 2 years, and that's for people that have never exported before. So you've got to be an SME, new to exporting, attempting to export. Tier 2 and 3 are for those that are looking at growing or what they call having a strategic shift in their exporting. Again, the term strategic shift hasn't really been clearly articulated at this stage, so I think it's a bit of a test around what they deem as a strategic shift, but we're hoping that that'll cover, you know, potentially a new market or a new product category or, you know, a new geographic location for sales, for example. So they tend to be fairly open in that. So what we do is we look at where you are as in your export journey. We determine which tier you fall under based on the expenditure that you want to spend, and then we apply for your grant up front in that, and then you'll actually get approval for those periods, whether it be 2 or 3 years at a time. The key thing that I say to a lot of clients is the EMDG is I call it precious. Okay, so you only get so many of these, so treat them like they're gold, and don't waste it for, you know, $5,000 refund if you've got future plans to actually really have a good attempt at exporting. So make sure the timing of when you claim this, you really are maximising the value for your organisation. The process here, and I put in my colleague's email, she heads our export grants division. So what we're doing is we're setting up a call, we're determining whether a claim for FY21 should be undertaken, and if so, we're doing those at the moment. And then concurrently, we're doing the process up front for the FY22 plus, doing the interviews and then doing the export plans, the applications and submitting. And then also we'll be helping clients with their paperwork and milestones as we tick along. So again, are there any questions on this particular one before we move on to the next grant? No, all good. Again, I can't quite see the chat box, so hopefully I'm not missing anything here.
Okay, there's some questions on the chat box.
Are there? Okay. Let me figure out how to. I'll stop sharing for a second, and I'll jump into chat and see if I can answer some. Okay. Okay, so I've got one here, PCT included. Sorry, and that was from Dilpreet. So can you explain PCT included if you're online, if you wouldn't mind unmuting and just clarifying that question for me? No? Okay, I'll move on. The R&D tax incentive is a self-assessment program. Interpretation surrounding the self-assessment aspects of this program presents a significant risk to companies. Have any changes been made to reduce the risk to companies associated with interpretation surrounding self-assessment? That's an easy answer. It's no. Unfortunately, one of the key tenets of all tax legislation is that it's self-assessed. So it talks to the underlying ability of organisations to be able to determine their eligibility under R&D tax incentive. So they are increasing the amount of education that they're putting out there, but at the end of the day, the risk around what you deem to be R&D versus what they deem to be R&D does not change because the legislation hasn't changed. They've just updated some guidelines. They've given additional guidance material to help guide that. The new portal has a lot more questions in it around, around basically what is or isn't, et cetera, et cetera. So there's a lot more sort of granularity around the way that they're processing the claims. But generally, no, unfortunately, the legislation doesn't change. So the risk is still there. When I say risk, basically it means is if you get an audit and there's an erroneous finding in that audit, so if Oz Industry says we don't agree that that's R&D, then you've got the option of you can fall on your sword and say, okay, fine, we'll give you back the value of that. So you make an agreement to repay it. Alternatively, you can say, well, we're going to have to agree to disagree, and you can actually take them through to the AAT and run a finding on it and try and get a ruling against that. Does that answer that question, Dylan, for you? Hopefully, okay. And then is the video going to be online? I'll pass that to Miko, but I'll say yes. I'm sure we can make that happen. So we will share a copy of the video after this session as well. All right, thank you everybody, appreciate it. So let's jump back in and we'll go back into our questions. So competitive programs. So this is so we spoke to before around the entitlements, and now we're going to go into the fun stuff, which is the competitive. These are the ones where you see, big dollars and ministers out chopping ribbons and doing all that fun stuff. So basically, competitive programs are sector-based. So the government generally has its own lists of priority sectors that it would like to fund. They're cyclical in the most part throughout the year, and even if they're open on an ongoing basis, they are still cyclical because they rely on panels for assessment. So there's generally dates that you have to meet to try and target to get your application in. This is a key thing here. The government never gives you a dollar, okay? So they'll only ever give you part of a dollar, and they always require co-contribution. So that'll be anywhere between 25 and 50% for organisations, and in some programs, 80% for defence. Not-for-profits and minority groups can sometimes get 75%. Look, sometimes if you're not-for-profit and there's a particular program, or there's some very rare exclusions where you'll get 100%, but generally the government will chip in if you can chip in as well. And they're also assessed on merit. So they publish what it is that they want to respond to. And I always say with competitive grants, it really is a case of square peg, square hole. You have to make sure that you get your project or your organisation must be clearly aligned, and you must be eligible. If you're ineligible to apply, don't bother. You're just wasting your time, because these are their government guidelines that are published. They're signed off by the minister. It's inflexible. They're almost treated like legislation. So you've got to make sure that you are a fit for whichever program it is that you're going to be applying for. So I've put this picture up here, and I've done this just to give everybody a bit of a feel, because I know we've got some people from varying organisations and at different cycles of their organisation, of where they're at. But I wanted to show you the stages that you can actually get grant funding and where you can't. So in that sort of this early stage here, this sort of R&D phase, which is where you're spending your money and your recurring expenditure, you've got your grand idea. That's where your research and development tax incentive kicks off. A lot of people look for other funding in that stage. There are programs like where you can link into the CSIROs of the world, and you can sort of like look into link into the defence organisations like Craig's organisation. So there is some funding there where you can get some research assistance, and it's also where we have sort of cooperative research centre activities as well, if you're at a scale where you can fund that. So there is funding during that period, but again, the government's not giving you a dollar. So a lot of people have brilliant ideas, and I mean like really, brilliant ideas. It's up to you to go and get private money if you don't have the funds to fund it yourself. To go and get the private money, if it's such a good idea, get the private market to fund it, and then utilise these incentives to get more bang for the buck, basically. But if you've got a great idea, unfortunately, there are a lot of people out there with great ideas. The government doesn't fund it. The only thing is there's those incentives, so you've got to be able to match that contribution. Now, what often happens is organisations spend a lot of money on these stages, and then they start to dip into what's called the critical valley of death. So that's the bit where you start to run out of steam, you start to run out of cash flows. Unfortunately, there really isn't funding in that stage. So the only grant that falls into that, which I'll touch on shortly, is a program called the Accelerating Commercialisation Grant. And that sort of takes you out of that critical valley of death into those early stages of commercialisation. So that's that little slice that I've got in there. And then once you're off ticking along, then obviously there's commercialisation and growth. So there's a lot of funding in that space. So if you can demonstrate that you're growing, you're investing into capital expenditure, you're developing new jobs creation, example, there's a lot of funding there. But again, once you hit that maturity business as usual stage, there's no funding there. The only thing that's in that space is things like your apprenticeship programs for employment. And then similarly, if you fall into that decline space as well, there's no funding in that decline space as well. So really what we have to focus on is making sure that you're aware of it, that you've always got a co-fund, and it sort of depends on what the activity the organisation is doing it and where you are in that cycle. So we've got somebody that's, Miko, if you wouldn't mind jumping in and muting that participant, that would be great. So federal budget overview actually identified a range of different priority sectors, and then on top of that, I've actually added in some additional priorities that I've established based on the grants that are available out there. So effectively, if you fall into any one of these categories, or you enable services into one of these categories, and you're investing, so it's not business as usual. No one's going to give you money just to turn the lights on and run your business. If you're investing into new research or new capital expenditure or new growth or new export markets, then 9 times out of 10 there'll be funding of one form or another for you to help you on that growth cycle, as long as you're not doing that business as usual type of activity. Here's a range of some of the competitive programs that are available. So, and by all means, as I said before, you know, there's 1,500 grants as at this morning when I had a look. So this doesn't cover them all off, but it certainly gives you an idea of some of the spaces that you can have a look at for further funding ideas. So we've got things like the Regional Jobs Investment Package, that's for regional investment into CapEx. Building Better Regions Fund, that's sort of a not-for-profit co-op or have a community benefit. That's a big one, up to 10 million. Entrepreneurs Program. Now, this is one that I reckon everyone on the call today would probably be eligible for, would soon be eligible for. They have, the federal has several streams. The smallest is a $20,000 growth grant. In order to achieve that, you must have been in one of those priority sectors previously or enabling services to those priority sectors. You must have had a turnover of $1.5 million in any of the last 3 financial years or incurred $1.5 million of expenditure in any of the last 3 financial years, and you're eligible for this. It's a $20,000 grant. There's a facilitation process that happens up front as part of it, but believe me, it's a brilliant program. It's long-standing, and if you are eligible, reach out. It's so easy to apply. You don't need us. All we do is we link you into the right people, and off you go. It's really simple. In that space as well, there's the Centre for Defence Industry Capability. So if you're actually in defence, the value of that 20,000 jumps up to 50,000. So there's a bit more there for defence organisations. The key one that everyone always rings me about is the $1 million Accelerating Commercialisation Grant. Now, whilst it's up to $1 million, they generally fund between $400,000 and $600,000 for this particular grant. Unfortunately, probably for every 50 calls I get, there would be one that I would say would be a good fit for this program. 2.5% of applicants receive funding under this grant. So that gives you an idea of how hotly contested it is. It's quite an extensive and collaborative process to receive funding under it. But if you are eligible and you have, I call them game changer, like you've got to have a real red hot, amazing, game changing product or service or something like that. You know, if you fall under that game changer category, then by all means, you know, go for it. Like, it's brilliant. You know, previous recipients are, you know, carbon fibre, one format size wheels, or Gardasil vaccine, or Canva. You know, like they really are looking for those unicorn type organisations. So it's hotly contested, but if you think you're in a game changer space, by all means, it's worth having a look at it. RISE, that's an events-based grant, not really that relevant for today. There are a lot of women in business initiatives, the Boosting Female Founders. So if you're a female-led organisation, then you can receive funding up to $480,000. Again, that was very hotly contested. I think the numbers were 0.38% got funding under the last round. So again, you've got to be quite a game changer type of organisation to get it under that. There are some energy initiatives that are run through ARENA. There's been a large focus on hydrogen. And, you know, the funds vary. There's been changes there. I think they're releasing more budget fairly soon. There's the Clean Energy Finance Corporation. It's not really a grant, but it's investment and lending, and that's large scale projects, like big projects. There's also Export Finance. So that's like a quasi bank that's run by government, but they operate commercially, and they also provide funding for government activities, or export activities. So a key thing for today, I think, for a lot of people that are on the call, is the Manufacturing Modernisation Fund. This is one of many initiatives that fall under the Modern Manufacturing Initiative. So that's ScoMo's $1.5 billion investment that they're putting into grants and funding. So basically, the last round was announced only a few weeks ago. There were 88 recipients under the previous round, and they were getting grants of up to $1 million. This is a capital investment grant, which is around remodernising, new technologies, productivity, and then also more jobs. It's looking for transformative projects, not just upgrades, and I'm anticipating there'll be another grant opening up towards the latter stages of this calendar year. The next one under that was the integration stream. This was more around integration and collaboration investments. Again, skills and jobs, it was funding on a 1-for-1 basis, whereas the previous one was a 25% funding basis. It's a bigger grant, so up to 1 to 20 million. They're slowly releasing the current round. So they've already released the top 3, clean energy, resources technology hasn't been announced yet. So I'm expecting that to come out this week. MedTech, food and bev have been announced. So they're slowly sort of releasing who's getting the funding under that. I'm hoping another round of this will open, but I'm saying likely, but it may not, depending on how much budget they've got left. And that's really going to be determined by the mega grant. This one is opening up on the 12th of August. And if memory serves, it closes on the 9th of September. It provides a grant between $20 and $200 million. So it's on a 1-for-2 basis. So in order to get this for a $20 million grant, the minimum project value has to be $60 million. So that's quite significant. And the maximum project value has to be $600 million. My feeling is that there are some recipients, and there's been some lobbying happening from the states already for some of the larger scale projects. So the state government's really getting behind this and saying, hey, fund us here. Hopefully that doesn't bode negatively for the Victorian and federal government relations at the moment, but we'll wait and see. But I think there'll be a fair amount of money going to South Australia as a part of it. And they've actually, even when they were doing the marketing, they were mentioning a couple of key projects. But they're looking for game changer type of projects, and joint applications are strongly encouraged. So they're really looking at, if we give you $1, we want to see that ripple effect throughout the supply chain. We just don't want to hand it over to one person and then not see the value from it. So that one is opening imminently. If you do have a project at scale, by all means, please reach out sooner rather than later, because there's quite an amount of work that goes into obviously a grant at this scale. Now, because of the profiles that people have got online today, I'm just keeping an eye on the time, I'm going to talk to a couple of the defence specific grants. Now, again, there's a lot of these that are focused on capital investment. So you see a bit of a theme that comes through here. The Defence Sovereign Capability Grant, it's up to, I've got a bit of contradiction there, 1.2 to 1.4. It's actually 1.2 million, I think, from memory. It's got a link to the SICP, so the Sovereign Industrial Capability Priorities. It funds up to 70%. The rumour had it that it was going to change or revert back to 50% as at July, but when I checked the portal, they're still advertising it at the 70% co-contribution. But believe me, there will be changes afoot. There seems to be a bit of a backlog of applicants at the moment in relation to that particular grant. So my feeling is there might be some shuffling of budgets to try and help flow the funds back through again. But yeah, keep an eye on that. The Global Competitiveness Grant, this one's up to 80%, which is quite phenomenal. SADI, this is for investment into skills training and activities. Now, a lot of people ring me and they say, oh, we want to get into defence, so we'd really like to get access to these grants. It's very hard if you're not swimming in defence to be accessing it. So you really need to be, it's not just having a toe in the water. You've got to actually be aligned to the sovereign industrial capabilities, and you've got to sort of be heavily involved in those activities. So that's something that's key there. Other funds that were there, it's available. There's the Next Gen Technology Fund. This is managed by the Defence Science Technology Group. They've got listed priority projects. The program is currently closed. I haven't really got a gauge on whether or not they're going to open it up again. My feeling is they will, because this one's one of those grants that opens and closes and opens and closes, and has done for years actually. And then the other one here is the Defence Innovation Hub. Now, a lot of people ring me asking about this grant, but it's actually not a grant per se. It's a tender. So if you've got a technology that you think that has very strong application and a strong desire from government in defence in particular, then you need to start a lobbying process which goes through the government channels, so talking through to the defence industry personnel at various levels, and get the buy-in. And then once you've got the buy-in, then you put your Innovation Hub proposal in. Putting in a cold proposal is generally not a good idea, because it won't be viewed favourably. You really need to get that emotional buy-in from the department before you actually do that. The Victorian competitive programs, so obviously we've got a lot from Victoria here. There's always ongoing funding under Regional Development Victoria. To manage expectations, it can be quite a protracted process, and it's very heavily linked to jobs. In fact, all of the state government grants are always linked to jobs. So that's just something to be aware of. So if your project is going to result in the reduction or removal of jobs, then it's not a strong candidate for state government funding. There's the Business Competitiveness Program. We're expecting another round of this to open in late 2021. The prior round closed in July, 4th of July this year, and we're still waiting to see who received funding under it. The maximum grant's 500,000. Again, it's a CapEx investment grant, so you've got to be investing into capital equipment in order to get this funding. And then there's also a range of vouchers. So, and these are really brilliant initiatives by the government, I must say. You know, they're smaller, and I know it's probably a bit of an administrative headache on government at a state level where they're trying to administer and manage compliance and stuff like that. But they really are very good programs just to get some innovative projects out there. So they're not going to give you cash per se, but they'll give you a 50% subsidy towards service-based activities that you might want to undertake. So they had a Boost Your Business program, which was for growth services. They've had some tech vouchers. They've had global gateways, which is around export initiatives. So I'm expecting that we'll see quite a few of those opening up. Again, it's a 50-50. So government never gives you a dollar. They always give you part of a dollar, but these are really good initiatives that we see. I'm going to skip through these slides. We'll be sending out a copy of the slides today for everybody that is an attendee so that you can see those. But these are coming through from the state government budget, which talks to where they're sort of funding competitive programs, so business innovation, etc. This is an interesting one here. There's a fund that's opened recently for R&D cash flow loans for SMEs. They put 12.9 million in the budget, but when I was actually talking to the department heads, they were saying it's actually 40 million. So there's a fair amount of money there. So if you are located in Victoria undertaking research and development activities and you're expecting a refund, then you can actually apply for this cash flow loan. There are some private providers that also provide lending, but this particular loan's very low interest. I think it's sub 1%, so it's extremely cost competitive. It's on a first in, first served basis. So if you fall into that category, do yourself a favour, fill in the expression of interest. They'll contact you and take you on that journey. But it's quite a good initiative, I think, from my perspective. As I said, there's a fair bit of infrastructure, tourism and arts, and whatnot. So key things, just was before we wrap up and we go to some questions. Before you apply, how to get started, eligibility. As I said before, if you don't fit, don't bother, okay? It's got to align to your budget. It can't be business as usual. Be aware of the timing. So there's no such thing as an extension unless the government initiates it. So if you miss the deadline, you're done. You've got to wait for the next round. So making sure that you meet those timelines is absolutely critical. Alignment to the merit criteria is critical as well. And then also attachments. So sell your project. You're in there competing. If you're going out and trying to get an investor into your organisation, what sort of documentation would you put together to sell the sizzle for your company? That's the sort of stuff that we want to see happening as a part of attachments when they're calling for them as part of a competitive grant. As I said before, things that won't be funded, things that you've already bought. So if you've already purchased your capital expenditure, they're not going to fund you because you don't need the money. They'll give it to somebody that does. Things that will reduce jobs, things that will take off interstate counterparts. It's not about fighting between the states. It's about Australia as a whole actually doing great things. And things around that if we buy it anyway, we'll get more profit, for example. So they're sort of the sorts of narrative that we would never put as part of a competitive grant application. So hopefully that gives you a bit of a feel for the grants, and it gives you a bit of an indicator around what's available. I've got a couple of questions coming through here, which I'll quickly answer as well. So here we go. Gary Anant has asked, competitive grants have a very short window for applications. Is there a way to hear about them before they're announced in order to start discussions and prepare for applications in a timely manner? Not expecting to get the official call early, just want to hear it's coming in order to start discussing possibilities. Well, Gary, you're welcome to sign up to our EDM. So we actually send out comms on a monthly basis, which indicates grants that are open or opening soon. Unfortunately, what happens is it's the cycle. So the government announces the budget, and it's all very high level. So what we do as an organisation is we review the budget from a state and federal perspective, and that gives us a feel for what they're funding, the sorts of projects, etc. And then we have that conversation with clients, but we don't really know what the grant's going to look like until it opens, unfortunately. And sometimes they're still putting ink on the guidelines, when they're saying, it's going to be launching next week, and they still haven't finalised guidelines. So unfortunately, it is a bit of a late process. It does have a very short window. But that's the other reason why I say to clients is, if you've got a project, it's not about what's today, it's about what's, in the next, 6, 12, 24 months. That's what we can help you with. I can't help you if you come to me today and say, I need this tomorrow. It's got to be, because, you know, by the time you apply, grant opens, you apply, you get approval, you then spend. It's a long process. So we rely on, you know, a timeline there to be able to help. And then once the right grant opens that matches to your project, that's when we can go forward. We're also very good at telling you what won't be funded as well. So we get a lot of people coming to us and asking us, you know, what's available, what may be funded, and then we can sort of come back and advise whether or not that's a likelihood. So hopefully that answers the question. Just see if we've got any more coming through here. Are there any other questions before I hand back to Craig? And if Craig's still on, if anyone's got any other questions. We've just had Yvonne, my colleague, getting a kiss from her husband there on the camera. Hello, Yvonne. And here's Craig. So thanks everyone for your time. We appreciate it. And yeah, if you've got any questions, please feel free to reach out, send me an email, and I'm more than happy to help. So thank you. And then over to Craig.
Thanks, Kate. That was amazing. Don't think you breathed for that 1 hour. So that's a very, very impressive presentation. And if nothing else, you definitely demonstrated the depth of your knowledge in this domain. Just wait a sec. I'll actually put my screen back so I'm looking at the camera. Kate's kindly opened the invitation for people to reach out to her and ask questions, and I'm sure she won't invoice you for that. It's part of development. And also remember, DSI is here to provide that facilitation and connection between Kate. We have strong connections into Defence proper. The question of lead time for grants comes up everywhere. We've gone back to DSTG and pleaded with them to provide more heads-up warning of when grants are coming down the pipeline. Even if the details aren't known, just prior preparation is definitely an important part of success in this game. Thank you very much, Kate. Really appreciate it. It has definitely opened eyes, I think, to what's out there and the possibilities, and more as equally important, what's not out there. So thanks for that. The video will be Kate, you send us the video, we'll host it as well as yourself, plus details on your newsletter and other information, and we'll circulate that. Thank you everybody for attending and persisting. Really appreciate spreading the word on what's out there and what's not. And we may do this again in the not so distant future, just to reinforce the success and the capability. So thank you very much. Thank you, Kate.
Thanks for having me. Thank you, everybody. Have a lovely day.
And goodbye, everyone. Thank you.
Thank
Bye.
you. Cheers.